Have you ever wondered why bank transactions take so long? Why does it sometimes take days to transfer money, even though we live in a digital world? Imagine a world where financial transactions are instant, secure, and transparent. A world where middlemen don't control your money. This is not a futuristic dream. It's happening right now, thanks to blockchain technology. In this video, we're diving deep into how blockchain is transforming the banking industry, removing inefficiencies, cutting costs, and making financial systems more secure than ever before. But before we dive in, don't forget to like, subscribe, and hit that bell icon to stay updated on the latest innovations reshaping our world. Now, let's get started. The traditional banking system, a flawed giant. Let's take a step back and look at how traditional banking works. When you deposit money in a bank, you're trusting that institution to safeguard your funds. But what happens behind the scenes? Banks rely on centralized databases, legacy systems, and intermediaries for nearly everything, whether it's processing a payment, verifying identities, or approving loans. This system is slow, expensive, and vulnerable to fraud. Take international money transfers, for example. If someone in New York wants to send money to their family in India, the transaction passes through multiple banks, clearinghouses, and regulatory bodies. Fees pile up, and the process can take days. And security? Not so great either. Banks store massive amounts of sensitive customer data in centralized databases. A single breach can expose millions of people to identity theft, fraud, and financial ruin. Clearly, something needs to change, and that's where blockchain steps in. Blockchain, a game changer for banking. Picture a system where transactions are recorded in a decentralized, tamper-proof ledger. No central authority, no intermediaries slowing things down. Every transaction is verified by a network of computers, ensuring trust and security without the need for banks to play middleman. That's blockchain in a nutshell. Unlike traditional banking, blockchain transactions happen in real time, are nearly impossible to alter, and don't require expensive third parties. Every transaction is recorded on a digital ledger, visible to all participants in the network, eliminating fraud and increasing transparency. Think of it like a Google document that multiple people can access and edit, but no one can delete past entries. The information is permanent and transparent, yet secure. But how exactly is this technology modernizing banking? Let's explore. Faster and cheaper transactions. Let's go back to our earlier example of sending money from New York to India. Traditionally, banks use a system called SWIFT, a slow and outdated network involving multiple intermediaries. But with blockchain, transactions happen almost instantly and cost a fraction of traditional fees. Take Ripple, for example. Ripple's blockchain-based payment network allows banks and financial institutions to send cross-border payments in real time, cutting transaction fees by up to 60%. Imagine being able to send money across the globe as easily as sending an email. This is the reality blockchain is creating. Security, a fortress against fraud. Fraud is a massive issue in banking. Credit card fraud, identity theft, and money laundering cost billions every year. But blockchain's unique structure makes it almost impossible to manipulate transactions or hack accounts. Here's why. Every transaction on a blockchain is recorded in a block. Once that block is added to the chain, it cannot be changed. Hacking a blockchain would require altering every single block in the chain across thousands of computers worldwide, an almost impossible feat. One real-world example is how banks are using blockchain to combat fraud. HSBC, a global banking giant, has already implemented blockchain for verifying transactions, reducing errors, and preventing financial crimes. Blockchain is turning banking security from a vulnerability into an unbreakable fortress. Smart contracts, the future of banking agreements. Imagine taking out a loan without paperwork, bank approvals, or delays. Instead, a self-executing contract, known as a smart contract, automatically approves your loan when conditions are met. Smart contracts are one of blockchain's most powerful innovations. These are programmable agreements that execute automatically when predefined conditions are met. No banks, no lawyers, no middlemen. For example, let's say you apply for a mortgage. Instead of waiting weeks for bank approvals, a smart contract can verify your credit score, income, and loan eligibility instantly, executing the agreement without delays. Banks like JP Chase are already experimenting with smart contracts to streamline loan approvals, reducing costs and saving time. Financial inclusion, banking the unbanked. Did you know that nearly 1.7 billion people worldwide don't have access to a bank account? Many live in remote areas where banks don't operate, leaving them without financial services. Blockchain is changing that. Cryptocurrencies like Bitcoin and Ethereum allow people to store, send, and receive money without needing a bank. All they need is a smartphone. Take developing countries like Nigeria and El Salvador, where millions of people use Bitcoin for daily transactions. With blockchain, they no longer rely on traditional banking, gaining financial independence like never before. Regulatory challenges, the roadblocks to mass adoption. Of course, blockchain isn't without challenges. Governments and financial institutions are still figuring out how to regulate this technology. Some worry that decentralized finance, DeFi, could lead to untraceable transactions, tax evasion, and money laundering. Banks are also hesitant to fully embrace blockchain, as it threatens their traditional business models. But despite resistance, the financial sector is slowly adopting blockchain because the benefits outweigh the risks. Regulators are now working on creating frameworks that allow blockchain innovation while maintaining financial security. It's only a matter of time before blockchain becomes a mainstream part of banking. The future of blockchain in banking. So, what does the future look like? In the coming years, blockchain will likely replace outdated banking systems with decentralized, highly efficient networks. Banks will adopt digital currencies, making physical cash obsolete. Smart contracts will eliminate the need for third-party verification in financial agreements. Some experts predict that by 2030, over 70% of banks will integrate blockchain in some form. With major players like Visa, MasterCard, and PayPal already investing in blockchain, this revolution is well underway. We are entering a new era of banking, one that is faster, safer, and more accessible to everyone. The way we handle money is changing. Blockchain isn't just a buzzword, it's the future of banking. From instant transactions and fraud-proof security to smart contracts and financial inclusion, this technology is reshaping the global financial system. The question isn't if blockchain will take over banking, it's when. Now, we'd love to hear your thoughts. Do you think blockchain will replace traditional banking? Drop your opinions in the comments below, and don't forget to like, share, and subscribe for more insights into the future of finance and technology. See you in the next video.